Rare earths are probably a wild goose chase.
Was any part of Trump's desire to acquire Greenland related to critical minerals?
To separate those elements from the rock, there are 970 steps.
Financing this, building the mine, optimized level of operation, that's about 15 years.
China really has control over the processing of them.
China weaponized very successfully access to these minerals.
A lot of their industry is vertically integrated, so they can operate the mining at a loss for use in downstream products. Overall, the business looks profitable.
Over 40% of electricity around the world is dependent on these materials. That's how powerful the Chinese weapon is.
Don't you think that this weapon is much more powerful than tariffs?
Of course, we just don't have industry. Because what happens if everybody just serves coffee to each other? It's not great for human capital development.
Hello and welcome. It's Capital Horizons, the podcast where money meets politics. I'm Igor Yelnik. My guests today are Stuart Macliver and Tomasz Nadrowski, founders of Amvest Capital. Hello, Stuart. Hello, Tomasz. Thanks very much for joining me.
Morning, thanks for having us.
We're going to speak about critical minerals and their influence on geopolitics today. We're also going to discuss how understanding the critical minerals landscape can help with trading in the financial markets. To be honest, had we had this conversation back in 2024, I would have started with China. We are going to discuss China today, of course, but since we're speaking in 2026, I would like to start with Greenland. Not too many people realize that Greenland is huge, with an area of over 2 million square kilometers. It's more than twice the size of France and Germany combined. It's more than 3.5 times the area of Ukraine, which is the biggest European country by area, except Russia, of course. Greenland's location makes it obviously strategically important. But was any part of Trump's desire to acquire Greenland related to critical minerals?
Our view is that the mining industry, geologically, Greenland's very prospective, but there are 56,000 people that live there. There has been some exploration over the years by, geologists who love adventure and going out to far places. And there are 2 operating mines in the country, and they're very simple industrial mines. And there's a workforce of 56,000 people that don't have much experience in mining. But geologically, it's prospective, but it's decades away from production. I think Thomas might be able to opine on some of the other geopolitical reasons.
Yeah, so Greenland has a history of mining. There were a couple of mines historically since 19th century, actually, built on the coastline. So there are probably 4 parts of the coastline that were explored and actually exploited historically. Not much of this is left, although there have been some attempts in the southern part to reopen well-known deposits, brownfields exploration, both in gold and in graphite. And of course, there's a recurrent discussion about rare earths. Let me just address that very quickly. Rare earths are probably a wild goose chase, if there are any geese in Greenland, I'm not sure. And that's because the deposits, which are actually quite large, are first associated with radionuclides, so radioactive elements such as thorium and uranium. And current legislation in Greenland does not allow for any radioactive elements to be exploited. It's actually much tighter than the US legislation, which already killed rare earth industry about 40 years ago. And secondly, it's encapsulated in a mineral which basically is impossible to process. So nobody has managed to extract rare earth from those minerals. Not the Finns from Outotec, not Germans, not the Chinese, and nor, by the way, Russians, which have similar mineralization just across the Arctic circle in Kola Peninsula. That mineral is called eudialyte. So if you see any snakes oil salesmen pushing projects with eudialyte in the Arctic circle, then run away, because this is something that even if science catches up, it's going to take, as Stuart says, a decade or longer.
Why do you think the production cycle is so long? You're speaking about decades.
So in like a simple gold mine, for example, that there are fewer steps from digging the rock to getting the gold bar in your hand. In some of these other minerals, and we put them in the critical mineral basket. Rare earths is the most complicated. Rare earths are 17 elements, and to separate those 17 elements from the rock, there are 970 steps in the processing chain. It's very complicated. It's not really a mining operation. It's more of a chemistry, metallurgy operation. And an example of rare earths, China really has, control over the processing of them. They took the know-how decades ago, actually was sold out of the US. And then, so that just can, from not just digging the rock, can be, lots of work done on the science and the chemistry and the metallurgy on how to extract them.
Mining in general is a very long lead process. So it's true what Stuart says about rare earths, which is particularly complex because of the mineralogy and the association of 17 different elements that you have to extract and separate. But even before you got there, if you are successful exploring for copper or for nickel, from the day you're successful, from your discovery, through translating this mineralization into resource, from resource to reserve, from reserve into bankable feasibility study, financing this, building the mine, construction, ramp up. Finally, you get to sort of optimized level of operation. That's about 15 years. And when people are surprised, it's probably surprised because oil industry doesn't work like this, except some extremely difficult offshore, right? I mean, fracking takes 12 months to 18 months to be in cash. That's not the reality of mining industry. You cannot rebuild mining industry all of a sudden, not even those metals for which we have still processing and excellence, such as copper and nickel, much less rare earths, where we completely lost this industry in the last 30 or 40 years.
But if we're speaking about Greenland in particular, do you think that all this talk about critical minerals in Greenland was just, a lot of hot air?
I think there is a lot of focus on this industry by the US administration. Someone senior in the administration told me the other day that there are actually two sectors that the administration pays a lot of attention to. One is artificial intelligence, and the other is critical minerals. The US still has an edge on artificial intelligence until further notice, and it doesn't have anything like an edge in critical minerals. So we've had probably 3 iterations now in terms of policies since the inauguration last year in February. The first one was this kind of America first attitude, which is a little complex when it comes to geology, very difficult to onshore geology. The second one was signing deals with a number of countries, including Ukraine, including Saudi Arabia and DRC and Malaysia and Thailand and Japan and Australia, or who have you. And in all of these bilateral deals, there's a critical minerals element to it, which either reflects foresight or panic. For me, it's hard to say. And we have now sort of a third stage of this where the government realizes that without processing industry onshore in the United States, it's going to be very difficult to develop this. I think the rest of what you're referring to, specifically for Greenland, is just the media fluff. The media got used to the fact that when there is an aggressive approach to a specific part of the world, the critical minerals story comes with it. It comes with it because of the crisis that we went through last year as the US lost its trade battle against China because China weaponized very successfully access to these minerals. So yeah, we read a lot about it, but Stuart and I and our team at Amvest Capital, we sort of chuckle because many of these places are just not easy to mine. In Greenland specifically, the entire endowment of power generation is about 530 or 540 gigawatts. So just to give you an example, one mine in Chile uses 6 times as much, right? One large mine in Chile uses 6 times as much. So you would have to build massive infrastructure, access, logistics in a place where you can basically mine for 3 months a year, given the weather conditions and the darkness and so on. Not your ideal place to mine. There are other places that are more easily accessible than Greenland. On the other hand, of course, the question of its geographic location, the island, very large as you mentioned, but being in North America, not in Europe. And if something ballistic flies across Greenland, it's not going to touch Copenhagen. It's going to touch us here in New York City. So, these are obvious reasons.
Yeah, indeed. All right, so let's switch to China. You mentioned that China has a dominant position in critical minerals, in rare earths in particular. And they've been building this industry for decades. So what is China's strategy from now on, in your opinion?
And China approached it strategically, not only on the mining side, but also processing, as well as later trading. It's a different model. We used a sort of a neoliberal model for a long time during the height of globalization, especially the United States does not have a very viable mining industry. And therefore, there is very little to build upon to develop those sectors that are a little peripheral, smaller, smaller markets, very illiquid, often without a liquid exchange in which you can actually probe the pricing. It's more based on bilateral contracts. And the other thing that happened with the Western mining industry in general is that once the industry went through a super cycle, so this is the first, say, 10 years of this century, where the mining industry grew very strongly, essentially to build China for construction, so urbanization, modernization of Chinese economy. And that story came to an end around 2010, 2011, after a very strong period of inflation, mining inflation. And the shareholders essentially said, well, from now on, please focus on returns rather than building empires that sort of punish shareholders very severely in the years after 2011. When you want to do this, you have to focus on something that you know. You have to focus on something that has high volume, a transparent market, predictable curves, mean reversion curves, and on your squiggles when you look at Bloomberg or the commodity exchanges. And that was not tungsten, and that was not antimony, and that was not gallium or germanium or rare earths. This was iron ore or copper, or maybe gold, which behaves differently. And so this is where the mining industry went. And then once the mining industry went there and China continued to build up its capacity midstream, the obvious client for all the mining mining production was China. And therefore, increasingly, as Chinese invested in this capacity by underpricing economic factors, that is, by offering capital below the rate of inflation, below the rate of GDP growth, underpricing was, of course, labor and access to land. So all the economic factors were deeply underpriced. And mining industry that was recovering from the super cycle sort of overreach could not catch up with this. And we had a couple of spells where the entire slew of mining companies in different sectors, like lithium, for example, developers were just bought up by Chinese state-owned enterprises around the world because simply China did not face the same type of constraints on the capital side, cyclicality of the markets, or even jurisdictional risk. Because very often the Chinese government sort of offers sort of an umbrella or organization, whether in Africa or in Latin America, to reduce the risk of their state-owned enterprises as they travel there in the form of SPVs with guaranteed offtake too, which is very unusual for a junior Australian or Canadian company that goes to exotic jurisdictions.
I think historically, the whole mining sector was, financed by joint stock companies listed in London, 200 years ago. They're doing expeditions to, the British were doing expeditions to countries like Australia and Canada and other far places. And, the geology industry really kind of took off, and that's how these companies were financed. And they're still financed that way today, except on the Australian Stock Exchange and the Toronto Stock Exchange. That's the VC market. And I think China a long time ago realized that. And China has geology for certain minerals, they're well endowed in, say, rare earths, and their cost price for producing rare earths is so low because it's a byproduct of the iron operations up near Mongolia. And other commodities, they don't have any mining capabilities domestically, but they control the processing. So I think in, copper, they own like 2 of the 10 largest copper mines globally, but then in copper smelting, that's about 70% of control. And then, so even recently, there's been some takeovers in the mining space, and, they can, with their cost of capital being zero, they can lodge a takeover premium for 50% of an Australian listed company the shareholders are happy, they got a 50% takeover premium, but a Western company can't compete because they could not justify that premium from their shareholders to pay for this company. And so all these assets just get, accumulated into the Chinese supply chain. And also, a lot of their industry is vertically integrated, so they can operate the mining at a loss for use in downstream products. And overall, the business looks profitable. However, if you separate the business units, it's clear that the mining is at a loss, and so that when they're competing against Western companies, it's hard for the Western companies to compete when it's a race to the bottom of prices.
And this is a good point. So there is a reason why this is happening to this industry. So you have to look at it from the perspective of the entire industrial strategy that China has adopted, which of course is now over reliant on exports to unwind some of the very heavy leverage in that economy. To do this, you have to control the cost of inputs. So everything that's upstream has, by and large, been always controlled by the Chinese Communist Party, so state-owned. That's true of mining and metals. That's true of basic chemicals, energy, telecommunication, banking. Of course, all these elements that then feed into midstream and downstream are always controlled by the state and planned first by the State Planning Commission and then by the National Development and Reform Commission, NDRC. So it's a very strategic approach, very patient approach, which also tries to excludes China from certain elements of volatility in those markets. It's easier in some and not so easy in others. That's why, for example, China created a state monopsony to purchase iron ore, where this is one commodity where China is extremely dependent on inflows from Australia and Brazil and working very hard to replace some of the Australian imports by building a massive operation, for example, in Guinea. So it's been a long sort of patient track record, I'd say, that has led to quasi-monopolization of some of these materials, certainly heavy rare earths, spheronized graphite, and gallium, near monopolization of tungsten and bismuth and vanadium and antimony, and very, very strong dominance in others, including, as Stuart just mentioned, even major metals that increasingly see the slow death of smelters around the world, in the Western world or in South America, and that capacity is migrating towards China. So it is really important what happens in the middle of the value chain.
So when you as a country, as a large country, such as China, which is actually the biggest economy in the world currently, if you count it by purchasing power parity, and you have this monopoly in critical materials, which are used pretty much everywhere nowadays, what do you do with this advantage?
Well, we know what China did with this advantage. So let's just go back 12 months. So our new administration approaches the very deep imbalance in trade between U.S. and China, a similar one between China and many other countries, right? With the exception of commodity exporters in some very high-tech countries like Japan or Taiwan, China has a current account surplus with everyone. So the U.S. administration approaches is saying, well, because they have a current account surplus and we have a current account deficit, it's going to be easy for us to just pinch them on that and try to rebalance that. Well, that's not what happened. That's not what happened because China used rare earths and some other materials and technologies related to production and processing of these as a weapon. It just simply threatened not to export any. And here's the difference.
Sorry, Thomas. In this situation, China responded. They didn't attack the US. It was a response to the tariffs which Trump was going to impose on them.
Yeah, absolutely. China responded to pressure from the United States and won that battle. There's no doubt about it. Why was US so vulnerable to that weapon? And this is a critical thing to understand. So when the US exports soybeans to China, let's say it's $11 a bushel, then on a CFR basis, China buys it at, say, $12, $13, right? Transportation, insurance, plus the price. When China exports rare earths to the United States, and that's what our administration visibly didn't understand, then $1 of the kilogram of, say, neodymium or praseodymium sold in China does not equal $1 of value in the United States, because the entire rare earth oxide business in the world is worth about $6 billion. The downstream value, let's say from the permanent magnets that are based on rare earth minerals, is worth about $10 trillion. So by withholding $1 of rare earths, oxides, the damage on the other side that cannot have access to this is $1,600. And neodymium praseodymium is not priced as $1, it's $65 in China. So you imagine the leverage that China has doing this. And that's because about 60% of electricity that we use at some point uses electric motors, and those electric motors, 70% of them are reliant on rare earth permanent magnets. That means that over 40% of electricity around the world is dependent on these materials. That's how powerful the Chinese weapon is. And it's used not only just against US, because when China imposed those restrictions, impose it on Germany, on Europe, on Japan, on Korea, on everybody else, not just the United States.
And then, I think they're using this industry to avoid kinetic warfare, but using it in a different form of warfare. And since August 2020, there have been 24 export restrictions out of China that are mineral related. And this recent truce, if you want to call it a truce, only is for 4 of them. So 20 are still in place. So I wouldn't exactly call that a truce. But it's just what the media are publishing. I think, it's a truce, great meeting with Trump and Xi Jinping and whatnot. But, if you look in the detail, it's clear that they're still withholding these products from the Western world and, doing it with the US, Japan, other Western nations.
Yeah, it's actually interesting to watch it because we're not a think tank, we're a fund, right? So we invested in this space. And so following the meeting in Busan between Trump and Xi Jinping, there was a massive drop in the value of these companies, the equities that produce it throughout November. So it was as if market was taking a deep breath saying, well, the problem is solved. There's no reason to put a premium on these companies. And of course, the world is a little more complex than that.
But if you are an American company which is dependent on these imports from China, what do you do?
Well, and then with the car manufacturers, it's looking like, looking like they're going to have to allow for manufacturing to go back into China, because if that's where the permanent magnets are going to be manufactured.
Yeah, it's true. The response from OEMs was, okay, if we cannot get magnets out of China, then let's move our production of electric motors to China. So it's not going to be a problem. Then the next day when China stops allowing, exports or shipments of electric motors, let's just move everything to China. There's no reason for any industry to be outside of China anymore.
Yeah, but don't you think that this weapon is much more powerful than tariffs that Trump was trying to introduce?
Of course.
Yep.
Of course. Absolutely. 100%.
But I think also the world has been decades used to cheap products that are manufactured in China, from clothing to microwaves to cars to high-end electronics. So it's going to be interesting to see how it plays out.
Yeah, so I'm sure, Igor, you know it, the only Western countries, and I'm using the term West institutionally, not geographically, that have maintained relatively high manufacturing to GDP is Taiwan, which has 32%, Japan, 20-something, and Korea, right? The only 3 countries that have proper manufacturing. And now look at the US dependence in all those bilateral deals on Japan, Taiwan, and Korea. Hugely dependent to redevelop our own semiconductor industry, to redevelop our own shipbuilding, our own metal refining, and so on and so forth. We just don't have industry. And if you don't have industry, you don't have manufacturing, of course, the quality of human capital is slowly dropping as well. Because what happens if everybody just serves coffee to each other? It's not great for human capital development.
Yeah, and you don't even grow coffee.
Mhm.
Yeah, I'm not sure we're roasting it either, but someone does.
I still didn't get my coffee today, so.
Sorry about that, Stuart. So if we move from China and the US to Europe, Europe is 500 million people. It's still very powerful economically, but recently we have seen very significant changes in the European economy. They were driven by the net zero policy, by this green energy, which have made energy more expensive for the European markets. On the other hand, we also saw the reaction of the European countries to the Russian invasion of Ukraine, and they stopped importing, well, not stopped, but significantly reduced the imports of Russian oil and gas, at least direct imports, and this also pushed the price of energy up. How does it fit into the story about increasing production in your country and reducing the dependence on China?
It's a very sad story, unfortunately. Europe for many years now has relied for its energy on Russia until 2022, for its prosperity on China, and for its security on the United States. And as you mentioned, this is a country that has a larger population than the United States, a region. And yet it has not been able to harness its own resources. There was an old fable that came to my mind following the first episode of Chinese weaponization of rare earths, and that was in 2010. There was a spat with Japan over the Sakako Islands, and China blocked exports of rare earths to Japan at that time. And so this was like an alarm bell for everybody around the world. So what happens if we don't have access to rare earths? And by then, there was no production in Europe or United States. And Japan was the largest customer of these materials from China. And so the reaction differed between those three poles of Western power, between Japan, Europe, and US. What did the Japanese do? Well, the fable I'm referring to is an old fable of three little piggies that see a wolf prowling on the edge of the forest, and each of them builds a different house to protect themselves. So the Japanese built a house made of brick. They invested in the one surviving Australian rare earth mining company. They invested in a metallization project in Vietnam and a separation plant that this Australian company built in Malaysia. And so they tried to redevelop the value chain a little bit just for the Japanese industry to survive without complete reliance on imports from China. So that's the house made of brick. What did the US do? It built a house made of wood, timber. What did we do here? Well, we went to Geneva to sue China at the WTO over this restriction and many other materials like tungsten and molybdenum and so on. And you know what? We won the case. Actually, we won 2 or 3 cases in the Rue Lausanne in Geneva. Bingo. Anything has changed about the American production? No. And now coming to Europe and to your question, sadly, Europe was this third piggy, and they built a house made of straw. What do you think Brussels did? Brussels organized a study group to understand the problem.
That's something.
Yep.
Have they understood the problem?
By now, I think they have. But if we just speak about rare earth industry, it would be good to actually overhaul legislation because, as I mentioned before in the case of Greenland, rare earth mineralization is often associated with radionuclides. So even if you bring this stuff from South Africa or Brazil or somewhere, if you process it, you have to leave this radioactive waste somewhere, and Europe doesn't have legislation for it. So good luck. Yeah, there are actually still some very good engineers, some of them octogenarian French engineers who remember how to process and separate rare earths, but the legislation is not ready. And Europe usually takes a long time to cough up legislation. So sometimes it's blows hot and cold really for me. Sometimes I think, well, yes, there is some engineering excellence. There's this project in France. There are other projects in UK and Poland and so on. But can they actually get their act together? Maybe under this three-way pressure between pressure from Russia, pressure from China, and pressure from the United States, maybe finally they will.
Well, you sound very optimistic about Europe. I'm less optimistic, to be honest. All right, since we are speaking about Europe, let's speak a little bit about Ukraine. There has been so much talk about rare earths deposits in Ukraine. Are they commercially viable?
So at the moment, geologically, it's very prospective, and there is somewhat of a mining industry in Ukraine. Iron ore mines and other mining operations. A lot of the exploration data, from what we can tell, is old Soviet reports that haven't been updated in decades. And haven't seen much, modern exploration in a long time. So it's hard to say. Still
I
a
think
while
there's
away. Not as far
yeah,
as Greenland, but it's still a while away.
it's also more accessible in peacetime than Greenland, and Ukraine also has inherited a lot of Soviet era metallurgical excellence. I think it shows currently on the battlefield too. Two industries that are viable there. One is titanium, and one is graphite. There's been mining of both. Rare earths, the most prospective areas are probably currently under Russian occupation. So that would take some clawing back. And again, question mark whether this is sufficiently attractive in terms of the breakdown, because as Stuart mentioned before, there's 17 different elements. Some of them are very highly valued for, say, multi-layered capacitors in semiconductor production, or for optoelectronics or for power electronics, which is critical for defense, and some others are not because they're used for, say, fracking of oil for oil production. So I'd say it's also a long term project, and I just don't think that rare earths specifically make a lot of sense there. But there are some other deposits that are very, very viable. And of course, Ukraine has had always a very strong iron ore industry and coal industry, metallurgical coal included. So, there is definitely a mining excellence historically in Ukraine.
Speaking of Russia, Russia is obviously a very big producer of nickel, palladium, platinum, gold, and a lot of other metals. Are they big in rare earths? And how are they affecting the market?
So they do not currently process rare earths. So believe it or not, the Russian material, Russian rare earths that are extracted either from Kola Peninsula, from Ural, end up in Estonia at a plant owned by Neo Performance, a Canadian company, which shows that not everything coming out of Russia is sanctioned.
No, of course not.
By the way, nor is titanium, which even
Yeah.
Americans are still importing, or enriched uranium for that
Or
matter.
uranium, yeah.
So
Mm-hmm.
yeah, exactly. So that's I'm not slapping here Estonia. Of course, Russians are trying to also become independent of that processing. This is an old plant that was built by the Wallenbergs in the 20s, when Estonia was an independent country, and then it was actually used for uranium processing under the Soviet times, right? And this is only one of two currently commercially viable Western rare earth separation plants. One in Malaysia, belonging to that Australian company I mentioned before, and one in Estonia, belonging to this Canadian company. Russians themselves have a very large complex that historically dealt with magnesium. So magnesium was important always for military applications, and there was Russia was the biggest producer during Soviet times, and that's in the Urals as well. They're building a different type of flow sheet for rare earths to process them over there. There's a strong approach. How come did they obtain the technology so easily, given that a lot of things, including, by the way, vacuum welding of titanium, was lost over the period of between Soviet Union and now? So how could they rebuild it so quickly if the West is struggling so much? A lot of conspiracy theories. Some people say that someone from China sold them, the equipment or the technology, but they're progressing, and they would like to be independent of Chinese influence. But there is no doubt that, of course, they receive permanent magnets from China since the beginning of the war.
Okay, so this is quite an interesting global picture. How do you think people are able to make money out of it when you trade in the market, when you don't trade the metals themselves, when you are not part of the mining industry, but when you are a hedge fund? How would it be possible to make money out of all this knowledge, out of all this understanding of the geology, metallurgy, geopolitics?
Mm. Well, some of these commodities, particularly the ones we focus on, you can't actually trade. There's no liquid futures for these commodities. And so the best proxy is the equity. And that can take a lot of sleuthing and research. There are 9 to 10,000 publicly traded mining equity names globally. And there's a lot of companies to trawl through, figure out which ones are decent. Meeting with management could take a lifetime. And sometimes there's no proxy. Like high purity quartz is a critical mineral, and there's no public equity for that. It's owned by a private company. Niobium, for example, we've managed to find a couple of equity names in that space, but the 3 or 4 biggest mines are mainly controlled by China. So yeah, the equities are a good start. And then I'm sure there's other emerging market, strategies as well. Thomas might be able to add.
Yeah, and of course, the ultimate way to gain exposure is for real assets. We, of course, we are in the public market, so we look at some pre-IPO opportunities, but generally we're in the secondary market. And we've been in a rally for almost a year now. And so the people tend to forget how life is between rallies. And it's not great because the cost of equity, cost of capital for these non-producing companies that will eventually, hopefully produce or will be bought out by a larger firm is very, very high. And you have to question the structure of the market. Does it really make sense for all these companies to be publicly listed and every now and again returning to shareholders and asking for more money for some equity to survive till the next, permitting stage or till the next courtroom case against people who are, trying to combat mining in the West? And so on. So it's a not a very viable structure. We compare it often to all fracking, which moved from public markets to essentially private markets, private equity, since the 1980s. But it's an easier fit with private equity because of the much longer duration, heavy depletion, and more flexibility, which you can do if you finish one well, and then with the shareholders you decide whether to reinvest next or whether to pay out the dividend. Once you have a mine, you have none of this flexibility. You can do a little bit of sequencing, maybe, especially in open pit. You can do a little bit of stockpiling. Maybe you have a modular plant, but overall you're just stuck with what you have, and it's something that's going to go for 10, 12, 20, 30 years or sometimes longer.
Okay, so nevertheless, your business is investing in equities because, as you said, it's virtually impossible to operate in physical assets, and there are no liquid futures to trade them. And you mentioned 9,000 publicly traded companies.
Yeah, roughly.
Which is quite a lot. And I would presume that there must be some interesting companies which are Chinese, given China's dominance in this market. What do you think about investing in Chinese companies?
Our fund excludes companies that are, involved in the Chinese supply chain. Our
Why?
benchmark. Well, a few reasons. The tonnage market of some of these minerals is quite small, not like gold or silver or copper. And say graphite, 50 years ago, graphite was basically just used in pencils, and now it's, used in batteries and a lot of other applications. So the demand use for some of these minerals is going from a very small tonnage base to something quite larger. And a lot of that is that supply chain is controlled in China. So it provides opportunity as the functioning West reshores its supply chains. There's going to be, a much bigger delta between the Western demand and the actual Western supply. And then secondly, it's a free call option for us on any geopolitical, conflicts.
I think it's an interesting question, Igor, you ask, because the first, as much as we're talking here sort of macro top down, when we analyze companies, we have to do it bottom up. We have to check the asset, understand the accounting, understand who's there, and so on. This, for most companies in China, is now illegal. You're not allowed to do due diligence in China anymore, or at least it's very risky with their new legislation from 2 years ago. So that, with that level of transparency, it already, even if our mandate allowed us to do it, it would be extremely difficult. But then let's go back to geopolitics. 2 weeks ago, China said that, again, they will slap our embargo on rare earth exports to Japan, still the largest importer of these products from China. Now, what does it mean to a Chinese mining company? Right? It's not great. Suddenly there's no revenue because the government decided you cannot sell it. And so we would rather benefit from these dislocations rather than being punished by this, because, of course, the country that has a near monopoly and stops producing, well, what do you do with this? You cannot eat it.
Well, we can see what is happening with Russian oil, right? Most cars in Europe still run on Russian oil. It's just that it hasn't been transported to Europe from Russia directly. It was traded via other countries, or maybe the oil has been replaced. Maybe they're running on, I don't know, the oil from Gulf, but the Russian
Yeah,
Gulf,
so
the Russian oil.
you're referring to smuggling, and there's
Yes, I am,
definitely a
but
lot of
this is how
smuggling. Look at
this is how the economy works.
Yeah, so this is how, for example, Infineon's semiconductors are found in missiles that are falling on Ukraine, right? German. So that's precisely why China tightened controls so much, because in 2010, so during this first mineral war between China and Japan, China initially slapped that embargo. The government lost because Chinese smugglers managed to leak the material into Japan and Western markets because the prices just run up so highly. Today, it's nigh on impossible for this to happen because China has largely nationalized the entire rare earth business. So there are 3 dominant companies that either fully controlled by the state or largely strategically controlled by the state, with very little independent operators that would be still able to process something. And so it's extremely difficult. I'm not saying it's impossible because, China, but it is much more difficult. And also giving the tightening of the political screws as we see these days with allegations of coup d'etat in Beijing this week, it's a tighter police state than it was in 2010, right? Under the current leadership or whatever is left of this. So it's actually very risky for companies to try and do this. I would say probably even more so than, when oil, which is very liquid material. We know, for example, of sanctioned Iranian oil that's being refined in southern refineries on the coastline in China, right? So there is sort of a very large market, very, very, very liquid market, and with a lot of pushers and very difficult to control entirely in the world. I think China is pretty good now at controlling inflows and outflows of these materials in and out of China.
Thank you very much. It's been a pleasure speaking with you.
Thanks so much, Igor. Right.
Thanks for having us, Igor. Thanks.